Also about kind of like going through the university process and all the sort of tricky things or things that people don't necessarily tell you. Not from just what I did, but what from people who've been successful have done and what people who go to school with me actually do as well. So for me, I kind of grew up all over the world. I grew up in Australia, I grew up in LA, grew up in Canada, and most of all, I grew up in New Zealand, which kind of makes me a very, very big Oilers fan because it's kind of mandatory for you to be. But I moved back in high school, and then I went to SFU to go to engineering because I really liked houses and I really liked movies, so I figured why not do engineering and then become an architect. And then I actually did it, and I was like, this is not for me. It was terrible for me because the idea of keeping track of if a building's going to stand up and making sure people don't die because you made something wrong was not the kind of responsibility I wanted. So from that whole experience, I realized it just wasn't for me. And after that, I tried to think of what to go into, and that's how I settled on business, because I thought business is kind of a good all-around degree to have because it's related to everything. Anything you want to do, you're going to be involved in a business, you're going to be working for a business, so it's good to know how it all works. So I concentrated in marketing, and right now I'm doing finance. And the first year, didn't really do anything because I thought you just have to focus on your grades and that would be good enough. But then I saw a whole bunch of people being involved in clubs, going for internships, going for jobs, and it started to make me feel a little bit of pressure, so I got involved as well. And so if you guys ever do want to get involved in clubs or get involved in internships, the most important thing to do is to research them beforehand. Go and ask people who've been a part of them, like if it was actually worth it. Because a lot of schools, every single school has clubs that actually do what they say that they do, and then clubs that don't really. So you want to make sure that they're organized, that you're actually going to get what they tell you you're going to get out of it, and that you, like everyone who did it before, have the same idea of it. Because a lot of clubs, like I was part of a marketing group at SFU, and they didn't really tell you what to do. They just kind of gave you projects and said, here you go, you have 2 months, good luck. And so for a student who's never applied before, it's really, really difficult. So always, always, always do your research. And one thing that I've learned along the way from being in engineering and going into business, and from what a lot of the mentors and a lot of successful business people that come in and talk to us say, is that there's no one path to get there. So if you think, I have this one goal, I want to be, say, an architect or an actress, and you think, I'm going to go to school, I'm going to get a job, and then I'm going to go and be that successful person, it hardly ever happens. And that's okay. If you don't know what you want to do, if what you want to do changes, if you realize you don't want to be in business or you want to change your major in business, it's all okay. The most important thing for you guys to do is just to remember to say yes. If you have an opportunity and it doesn't seem like it's related, say someone offers you a job working for a medical company and you want to be in marketing, you want to be in finance, it still might be a good idea to take it because you meet people that way. All sorts of companies have different marketing divisions, they know people, and to learn a lot about yourself and to learn what you don't like. And I think that's the most useful thing, is that when you take different opportunities that you don't necessarily expect, a lot of the times they're going to teach you something about yourself or help you find another goal. So even if your path is sort of winding and it doesn't take you to whatever you wanted to be in the first place, you can always find your way back, or you'll find a goal that was way better than you could have actually ever imagined. So, what do you guys think finance is? Does anyone have any idea of what they would say in one sentence what it is? Yeah. So a lot of people say that finance is just about managing money, and that is a huge part of it. You have to know how to move money, how to calculate stuff, you have to be good with math. But the main important point about finance is that it's about creating wealth and creating balance. So what that means is that the wealth aspect is, it's not that I want to invest in Apple because I really like Macs. It's, I want to invest in whatever is going to make the most amount of value for me, or the most amount of wealth. And that's the same thing for a company as well. And then the balance is to do with risk, and to make sure that everything you have balances out, so you don't have a whole bunch of risk and very few profits or very few assets. So there's two main types of finance. The first one is corporate finance. So corporate finance is related to what a specific company does. And the main goal of corporate finance is to create value for the firm and how that all relates to projects. So whatever a firm does, all they think about all the time is whatever I'm doing going to make me value? Is it going to make the people who own the company, who are called the shareholders, more wealthy, essentially? And the way they do this is by investing in projects. So if it's buying land, if it's creating a completely new type of computer, they have to sit down and think about all of the risks, all of the costs, and all of the revenue or the income that they're going to get from the project, and all of the little side effects that could happen. If they make one new computer, is that going to impact the computers that they already have? So that's all what they have to think about when they're considering whether to invest in a project. That's essentially the bare minimum, the bottom line of what corporate finance is. So how they do this is they look at assets. So your assets are your your cash, your land, your equipment, everything you use that helps you make money. And your liabilities are kind of like your debt, what you owe people, or any of kind of the risk involved in it. And the equity is the profits that's left over afterwards. So you make money from your assets, you pay off your liabilities, and you get your equity or the money for the people who own the company after. And so the reason it's a scale is because you have to have them balanced. You can't, if your assets are worth like $10 million, your liabilities and your equity have to be worth $10 million too. If it's worth more, if your liabilities are greater, then your company's in danger, because that means that you have more liabilities than you have sort of revenue or profits coming in. And if your assets are greater than your liabilities, then it kind of seems like there's something dodgy going on, because it's not really possible. So then that's probably not a very good company. That's all that it comes down to, is balancing those two sides. And the second part is financial institutions. So if you don't want to do finance for a company, then you would be working in financial markets. So there are lots of different types of financial institutions, but the sort of common part of all of them is that they trade and they hedge. So they create securities. So those are stocks, those are bonds, anything that trades on stock exchanges, which I'm sure you guys have heard about some way or another. And they're responsible for sort of managing or creating those. And they also hedge. And hedge means minimizing risk. So if I'm supposed to get a whole bunch of money in a year, I want to make sure, if I think there's going to be a recession, or if I think this drastic earthquake's going to happen, I have to find a way to make sure that I actually get that money. And that's what hedging is. So these are the different types of companies or financial institutions you would work for. So the most common one is probably a commercial bank that you guys would know of. So commercial bank is just what we always do. We go to the bank, we put in money, and we get a little bit of interest. That's just the very sort of basic type of financial institution. Then you go to investment banks. Now investment banks are those really, really massive banks that work for really large companies. And what investment banks do is they make shares for a company. So when Apple decided to go public, they had to hire an investment banker or investment banking company to make those shares for them so that they could go and trade them and that people could buy them. Then you have insurance companies, so like your car insurance, your house insurance. They essentially take a whole bunch of people's money so that if they are ever in an accident, they can support them, and that's essentially their job. A brokerage is kind of like an investment banker, except it's for when they don't have stocks. So if two companies want to trade something, but they're not on a stock exchange or they don't have shares, then they would go through a broker, and they make money that way. And then you have investment companies. So investment companies' jobs are, as they say, just to invest in different types of assets. So you buy little chunks of their portfolio or what they have invested in, and that's how I would make money if I invested with them. And then trusts are like, a real estate trust is where they buy a piece of land and then they give you some of the profits from it. So they have one type of asset and then they share the reward with you because you invested in it. So if you ever wanted to get into finance and you didn't want to work for a corporation, you would be working for any one of these. And it kind of seems a little strange sometimes because you're like, why is this important? Why would I want to do it? financial institutions are sort of the reason that everything happens in our world or in our society. If we didn't have financial institutions, then people wouldn't be able to borrow to buy houses. Companies wouldn't be able to borrow to make the newest type of like revolutionary drug or new computer. And so none of that stuff would get created. And so countries like Cuba and the communist countries, they don't have financial markets, and so they're not really wealthy. They can't invest in a lot of stuff. And so it's kind of the center for governments being able to get money, for companies being able to get money, and for houses being able to get money. So if it didn't exist, none of this would exist.
There's no like progression, like you can't move forward.
Exactly, yeah. So if you don't really know if finance would be right for you, these are kind of the things you would want to make sure you had in there. So you should probably like numbers, specifically algebra. So if you like doing those equations, or at least you get them, it's going to come a little easily to you, and you won't have to work as difficult as it. That doesn't mean that you can't be in finance. If you're really, really interested and curious about it, of course, go for it. But if algebra is something that you were good at, or at least you were interested in, it would be less of a learning curve for you guys. And then if you want to work for any of those financial institutions I talked about, you have to be prepared to work 12 to 16 hours a day. And that's for at least the first 3 years of you being involved, minimum, in a financial institution. It's a lot of work, so you have to really like it or be really motivated to be a part of it. For me, I knew straight away I didn't want to be in a financial institution. The only reason I took finance, I want to be in marketing, but I took finance because I was curious about it. The stock market kind of scared me. I never understood it, and so I didn't know how it worked, and that's why I took it. And so mine was just out of curiosity that I took it. But yeah, that's pretty much it. There's some really interesting things that you learn about it along the way. When I went into it, I thought all financiers and brokers were evil. I kind of thought, I don't know if you guys are allowed to watch Wolf of Wall Street, but Leonardo DiCaprio, just evil, trying to steal people's money and making everyone poor to become rich. That's not what they do. They find little differences and they say, okay, this makes more money than this and I have the same amount of risk, so obviously I'm going to invest in that. There's no evil in the system, it's just a few evil people that ruin it for a lot of them. But yeah, do you guys have any questions?